Well, let's move on before we run out of time here. Let's talk about, in this industry has just exploded recently. We're talking about the computer hardware industry. We're going to be looking at Seagate Technologies. Gosh, this stock did nothing for years. We'll talk about the performance of it, but the symbol is STX. Their PE ratio now is 39 versus 40.6 for the industry. Price of sales, wow, 7 versus 1.3. No book value, tangible or otherwise, no book value for Seagate. Their price of cash flow, 44 versus 18.9. PEG ratio, 1.8. That's good compared to the industry of 5.9. Now, their earnings over the last year are up 41.6% versus a decline of 12.4% in the industry. I think this industry is pretty wide with the computer hardware industry because they're more memory storage. Yeah. They should kind of have, I think, in my opinion, their own separate industry because it's too broad with the computer hardware industry.
Yeah, I mean, is that like lumped in then with like Hewlett Packard?
I think so. No? Yeah, Dell, everything else. Yeah, locked in there with the computer makers. The sales for them up the past year, 19%. That's very positive. Again, industry down 14.5. The 5-year earnings per share growth estimate is 14.1 for Seagate versus 9.2. Now, they do pay a small dividend, 1%. They use 35.7% of their earnings to pay that out. And I guess that was much higher probably not too long ago when the stock was much lower, because now with a big increase in stock, your yield drops. Stock price goes up, yield will drop because of the what it costs for those shares. Payout ratio now is about 53% on the free cash flow side. Look at the balance sheet. We got a current ratio of 1. That's below the industry at 4.3. No debt to equity, so I'm assuming, I'm going to guess, I'll look at it, but I don't think they have any equity. We do see a net profit margin, very good, 17.9%. That's well above the industry at 3.4. Return on equity, a negative 2,719 versus a positive 35.1. My guess is they probably have no equity, or again, very little equity. And then we do see free cash flow, $1.2 billion versus $2.9 billion for the industry. Chase, what do you got going forward?
So current price here for Seagate Technology Holdings, the ticker symbol again, STX, is $304.01. 52-week range low here, $63.19, and the high $332. And so far this year, it's up about 10%. But it seems like every day it's like up 8%, down 8%, up 7%. I mean, it's just been a crazy trade, and people, I think they're trying to take profits. I mean, over the last year, it's up about 220%. So, I mean, there's been a lot of hype kind of circulating around this. I don't know enough about this space. I don't know enough about technology to understand why this space is as exciting as it is.
And I remember years ago, like, it was flash memory. It was kind of like outdated. They had new stuff. It seems like all of a sudden something's changed. We're like, wow, this is the next, great invention here they've got.
Yeah, I mean, because for years this was like a value trap, right? It would trade at like 8-10 times earnings, and it's like, wow, I wish we would have bought this for the value.
Well, this is where we talk about being patient. I mean, if you were patient a few years, you've done very well. So,
I mean, your 5-year return up over 400%, your 10-year return up over 821%, and this is one used to have a great dividend. As you said, only now 1%, but obviously with the huge increase in the stock price, if you bought this 10 years ago, I mean, you were getting good yield on it.
Yeah.
Looking forward, though, for Seagate Technology, we go out to June 2027. I see estimated earnings per share here, $15.29. That gives us a target sell price, actually more reasonable than I thought it would be. But target sell price here, $253.81. The forward PE, not a value company at over 18 times earnings. But frankly, I thought this was going to be in the 30s, 40s in terms of the valuation. So, there is that component, but I mean, I don't know, again, enough about that business, but they're looking for earnings growth here, 43% this year, 32% next year. I don't know what's changed in this business, but I mean, there is definitely that hype around this company, and I think other players as well.
Yeah, I've not heard anything specifically why all this hype is gone. I did look at the balance sheet. Their equity is a negative $63, I think that's $1 million. They do have a lot of debt. Their long-term debt is about $3.5 billion. The balance sheet doesn't look that good, but they're making a lot of money, it looks like.
And I just got to point out, I mean, the player in the space that has been the most intriguing is SanDisk Corporation. They were spun off in February from, another kind of competitor to Seagate, which was Western Digital. SanDisk, since that spin-off in February, is up, let's see, I think it's gosh, where is that number? Of course, it's not working. It was spun off around $27, $28, and now SanDisk is at $377 a share. Year to date, this stock, SanDisk, it's up 58%. It looks like, holy cow, that
Year
can't
to
be
date?
it. That's
Wow.
what it's saying. I mean, gosh, this thing is just crazy.
I mean, obviously, we're going to tell people, I mean, this is not a buy. I
No,
mean, it's a speculation is what it is, speculative move. It could go higher. But also, too, before you even consider it, you got to find out what's going on in the space. I mean, this is some type of memory. And I'm trying to think, is there something to do with AI that's why they need more memory? I mean, this is
assume.
short-term memory, not long-term memory.
Yeah, I mean, we talked about Micron last week or 2 weeks ago, and kind of the volatility in earnings with that space. I'd assume there'd be something similar here. You might be in a nice earnings growth cycle, but again, if it's going up 30-40% a year, there's potential that earnings could collapse. Maybe a few years from now.
Yeah. Well, there you have it.